Now, Blackstone posting an increase in third quarter profit as its credit arm was boosted by this influx of investor cash to become the firm's biggest business by assets. The credit and insurance arm took in $21.4 billion of flows during the third quarter, accounting for more than half of the company-wide total. Joining us exclusively here in Tokyo is Gilles Dellaert, Global Head of Credit and Insurance at Blackstone. It's great to have you here.
Thank you for having me. Good morning.
So we're talking about this momentum in your sector. Tell us, is it going to continue? Why?
Yeah, look, I think we're seeing this long-term structural shift towards private credit. And I think we're in the very early days. So we think it's going to continue, and I'll tell you why. It started really in direct lending, which was the first market where borrowers started to pivot from just public market execution to private market execution. That business is obviously a big business for us. We're one of the largest global managers in that space with $123 billion of direct lending assets. But that's a relatively small market. Leveraged finance in general is around $3 to $4 trillion of addressable market. What's happening now in this second phase of private credit is you're starting to see the same thing happen in private investment grade assets, i.e. the kind of financing of the real economy, which is a much larger addressable market, $25, $30 trillion or more. And as borrowers increasingly are starting to use private solutions, you're seeing the kind of flows increase in that space and the market share pick up. So we like to call it kind of like the farm to table model, where borrowers come directly to lenders or investors. Borrowers like it because they're getting speed, certainty, and flexibility. Investors like it because they earn a little bit more spread than they do in public markets at a time when public markets are tight. And that's really what's fueling this growth.
How much of that enthusiasm is coming from Asia, specifically any new projects or initiatives here in Japan?
So I would say in Asia, it's probably a little bit earlier days than it is in the US or in Europe for that matter. Our business globally is growing across the board. So we're seeing inflows from Japan, from Asia more broadly. But I think US allocators have been doing this for, some period of time longer than what you're seeing here. So earlier innings, but we're seeing it across all of our client channels. And so for us, our business, if you break down the pie chart, if you will, historically, we sold drawdown funds to institutional LPs. Today, institutional LPs represent around a third of our business. The other third is insurance, and the other third is private wealth, high net worth individuals. We're active in all those channels in Japan. We obviously struck a partnership with Daiwa to distribute our credit strategies a while back. We've added partners with Nomura and Nikko Securities on top of that, so that market's growing. In insurance, we've got a long-standing partnership with Nippon Life and a number of other firms. So across the board, you're starting to see it happen. It's accelerating, but a little bit behind what we're seeing in the U.S.
How does the changing landscape when it comes to monetary policy, whether it's the BOJ trying to tighten or the Fed trying to cut, but actually slowing down those rate cuts, affecting your opportunities?
Look, in general, I think what's happening in rate markets or in spread markets, that tends to be cyclical and maybe more short-term oriented. No question that we're in an easing cycle and that rates likely, end up going lower. I think for credit, what that means is maybe people will say that's going to result in less inflows into credit business or credit products. I think what's more relevant, or the better question to ask is, how do allocators look at credit or private credit when they make these allocation decisions? And what I would say there is they compare it to what they can earn in cash or in liquid fixed income or liquid credit products. Those are trading at all-time tights. Those two have come down from an earnings or all-in yield perspective. And what they really look for is the relative spread they can earn by allocating to private credit. That spread has held in very nicely, particularly in the investment grade business, where we generate around 185 basis points of excess spread on our record deployments that we saw so far year to date. And more broadly, the same applies in non-investment grade markets. So I would say the relative excess spread is what draws investor demand, and that really is holding in. And I think that's more structural than the short-term path of interest rates as we may see it.
When it comes to the expansion of private credit opportunities globally, you've talked about wanting to seize on that momentum. Where do you see those opportunities? We've talked a little bit about Japan, but beyond that, around the world, are there sort of priority focus for you?
Yeah, look, Heidi, I would say the kind of origination side of the equation, i.e. where we find opportunities to lend or finance businesses, that applies globally. I think in markets like Japan, it's probably earlier than it is in markets like Australia, where we've been very active in our credit business. The same goes for a kind of expanded footprint in Hong Kong, Singapore, and elsewhere in Asia more broadly. We have over 500 professionals at the firm in Asia across all these offices. So we leverage our global platform with local presence, both originators, underwriters, and people that source deals. You've seen us be very active in private equity and the real estate business, both in Japan as well as outside of Japan. And I think what's happening is that as interest rates come down and the cost of capital comes down, you're seeing more M&A and general market activity, and that then in turns fuels demand for credit. So we're seeing it across the board. We're active, we're starting to be more active in local currency in all those markets to a certain extent as well. And more importantly, our investor clients want us to be present. So the demand from our investor clients across the channels that I mentioned before, institutional, insurance, and private wealth, is there, strong, picking up. And so we're very committed to the region, and we're very committed to Japan.